De-dollarization in international economics. 2. Geopolitical consequences. Loss of the exorbitant privilege associated with the dollar's reserve currency status. That the United States enjoys unique economic advantages because the US dollar is the world's dominant reserve currency. These advantages, termed exorbitant privilege by economist Valéry Giscard d'Estaing, include cheaper borrowing costs. The US can borrow money at lower interest rates because global demand for dollar-denominated assets, like US Treasuries, keeps yields low. Trade deficit flexibility. The US can run persistent trade deficits without significant economic repercussions because its imports are paid for in its own currency. Economic leverage. The US can use the dollar's dominance to impose economic sanctions and influence global financial systems. Losing this status would mean higher borrowing costs for the US government, reduced ability to finance trade deficits easily, and diminished global influence. Decreased leverage in using financial systems as tools of foreign policy, e.g., sanctions. From the perspective of emerging economies. 1. Economic independence. Reduced exposure to dollar volatility and US monetary policy spillovers. Greater freedom in managing trade and reserves. 2. Challenges. Transition costs, such as restructuring trade and reserve systems. Restructuring trade systems. Countries aiming to move away from the dollar must establish new mechanisms to conduct trade in alternative currencies. This might involve negotiating new trade agreements, developing currency exchange infrastructure, or aligning financial systems with trading partners. Reshaping reserve systems. Central banks holding large reserves in US dollars would need to diversify into other currencies or assets. This transition involves financial risk, administrative effort, and potential losses due to exchange rate fluctuations or lower returns from alternative assets. These transition costs can make de-dollarization a slow and resource-intensive process, even if the long-term benefits seem appealing. Risk of fragmentation in the global financial system, increasing transaction costs. From the global economy's perspective. 1. Increased multipolarity. A diversified reserve system could reduce systemic risks from over-reliance on a single currency. Enhanced regional economic cooperation and resilience. 2. Potential for fragmentation. Complicated trade and finance systems with multiple dominant currencies. Increased currency competition leading to financial instability. As countries move away from the US dollar, they may start using a variety of currencies for international trade and reserves, such as the euro, yuan, or digital currencies. This diversification can fragment global financial systems, as there would no longer be a single dominant currency to streamline trade, investments, and reserves. Financial instability. Greater currency competition can lead to exchange rate volatility, as the value of currencies fluctuates more frequently in response to market forces. This unpredictability could increase transaction costs and risks for international businesses. In extreme cases, competing currencies could result in financial crises, especially in smaller or less stable economies that might struggle to adapt to a multipolar currency system. In summary, while diversifying away from the dollar might reduce dependency on a single currency, it could introduce new complexities and vulnerabilities in global trade and finance. Perspectives of regional powers, e.g., China and the EU. 1. China. Opportunity to promote the yuan as a global currency, increasing its geopolitical influence. Challenges in establishing trust and stability in the yuan due to capital controls and limited convertibility. China's government tightly regulates the flow of money in and out of the country. These controls limit foreign access to the yuan and reduce its attractiveness for international transactions or reserves, as investors value the ability to move funds freely across borders. Limited convertibility. The yuan is not fully convertible, meaning it cannot easily be exchanged for other currencies in global markets without restrictions. This undermines confidence in its use for trade and as a reserve currency, as global currencies generally need to be liquid and freely tradable. These factors hinder the yuan's ability to challenge the dominance of the US dollar or other major currencies in the global financial system. European Union. Strengthened position of the euro as an alternative reserve currency. Balancing the benefits of increased euro adoption with maintaining economic stability within the bloc. Key debates surrounding de-dollarization. 1. Economic stability versus diversification. Proponents argue that de-dollarization reduces systemic risks tied to a single currency. Critics warn that rapid de-dollarization could lead to market volatility and reduced liquidity. 2. Role of technology. Supporters highlight digital currencies as tools for bypassing traditional systems. Skeptics caution against the risks of cyber attacks and lack of regulatory frameworks. 3. Geopolitical dynamics. Advocates view de-dollarization as a counterbalance to US dominance. Opponents argue it could exacerbate geopolitical fragmentation and conflicts. Conclusion. De-dollarization represents a complex, multifaceted process with profound implications for international economics. While gradual transitions may foster greater balance and resilience, rapid or uncoordinated shifts could destabilize the global financial system. The outcomes depend on how key players, the US, emerging economies, and regional powers, navigate the challenges and opportunities inherent in reshaping the global monetary landscape. As the debate unfolds, maintaining global economic stability while accommodating multipolarity will remain a central challenge.